Good afternoon, good morning, good evening, wherever you are, whenever you're watching us. Welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for November 9, 2008. AccendoTraders.com, effective trade plans delivered daily. Each time we come together to work on our trade plan for the next business day, we go through our stocks and see what's going on and make sure that we know what's coming down the pipe as far as news and earnings. We also want to look at the newsletters and blogs and check our sectors and make sure we're preparing ourselves for possible new trades. We're always scared for new trades, and most importantly, by having a trade plan, we have time to spend with our family. So, this last week ended down for the week. The Dow down 300, S&P down 30, NASDAQ down 7. But the overall theme is what I always say, the stock market pauses for no one. And even though we had a historic election and record turnout and no matter what political affiliation you're for, certainly you can feel proud of the country that we've taken a step forward. But here we are, and I've always said that the market doesn't care who you are. The market just goes. And the market didn't care about any historic election. It followed the historic election on Wednesday and Thursday with the biggest two-day drop. The S&P 500 dropped 10%. Now, it was certainly understood because we had gone up 18%, I believe, the previous 6 sessions. So a pullback was in order, but again, it was certainly a big pullback and more than just profit taking. There were certainly some concerns. Wednesday, we had the ADP employment that reported an estimated 157,000 jobs were lost in the month of October. The business sector continued to give us these nice, cautious guidance as far as corporate America. I mean, again, I don't even think traders are even concerned about third quarter earnings right now. They're all looking at to see how bad the fourth quarter is going to be. And then we had a banking analyst on CNBC talk about banks and saying how the banks are in much more trouble. And she even went as far to say that Citibank will be trading in the single digits. Wow. The retail same-store numbers for October obviously were very disappointing, with the exception of Walmart, which actually posted a 2% gain. The European banks cut their rates above and beyond down to 3%. And, that's not something to be taken lightly. They don't really do that. But they also mentioned the deterioration of the markets in the Europe. And then, of course, we had Friday, which was the confirmation from Wednesday, which is the non-farm payroll numbers had nothing good economically. October saw a 240,000 job loss. They revised the previous to 284,000, which is, the friends and I, we always joke about these government numbers, and they can put out, how can you say in September it was 159,000 and to revise it to 284,000? They were wrong by 50%. They can put out whatever the heck they want. And unemployment went up to 6.5%. And finally, we had the automakers basically on the belly of vertical and belly up. They used a lot of cash. Ford, $7 billion, GM, $6 billion. They're waiting for this bailout from the government, or they're going to run out of money. I think they said early in 2009. So, it's starting to be interesting, and we're not over. It's definitely not over. And here was also weird. Look at this. Look at this. No economic data Monday, Tuesday, and Wednesday. And we know that Wednesday's always crude inventories. But right now, they're not scheduled to go. I'm not sure about that. Wednesday, Friday. So not a lot going on next week as far as economic data. Nothing tomorrow. As far as earnings tomorrow, nothing before or after the market. And you can see Walmart, Kohl's, Macy's, Abercrombie & Fitch, JCPenney. I've got LVS in a minute. Remember, LVS was actually supposed to have the earnings last week. But you can see that we have a slew of retail companies in the retail sector giving their earnings. Just like last week, there was a lot of oil and energy stocks. But I really don't see the catalyst. It's really going to be the sentiment of the traders going on for next week. As we begin to look at our sectors, we're going to see a reoccurring theme. I'm going to go ahead and take out my trend line here. I'm using telecharts. And I'm going to just come up here, draw a trend line down like that. And then I'm going to go ahead and draw another trend line right here. And on this particular chart, you could debate on where your bottom is. I'm going to draw it here. And what's my point? My point is we have a descending triangle. And remember, during this time period here, we talked about the symmetrical triangle that we're going to. Now what I'm seeing is a descending triangle. Remember, we're still in a downtrend. Great that we moved up here, but we're still in a downtrend, and we did fail. We did break the 20, which we were hoping and we kind of predicted, but now with our Wednesday ADP, we've got a breakdown, and now we're rallying back up. So at this point, our sectors, our market needs to make a choice. Are we going to break out and finally make it to this 50 moving average? Or are we going to go ahead and come down and break lower? Which way is the market going to go? So this is a theme that we're going to see. Here's agriculture. Again, we can draw the line here on energy. Let's look at oil and gas. Same thing. Coming down here to metals. Same thing. Steel. Same thing. Gold. Same thing. It's just a recurring thing. Let's go down here to drugs. This is one of our stronger sectors. And you can see that it's still strong, but still a descending triangle. Drugs is still a sector we like. Look at biotech, another strong sector, but still showing some signs of weakness. Here's aerospace, same thing. Retail, we had those bad retail numbers coming out. We've got a lot of retail companies this week having earnings. Take a look. Transportation, we were loving NSC, BNI, and look at the huge push down we have there. Not giving us that same warm and touchy feeling. All right, here's our computers. Here's software, electronics. So, again, the market has to make a choice. Are we going to break up and finally run up there and test that 50 moving average, or are we going to head down towards our support, October lows, and go lower? Okay, so let's now move on to the education portion of our video. We are finally finishing up Chapter 3, the Taking Responsibility chapter. Winners, losers, and busters is a section that we're on. There are traders who win all the time. There's most definitely traders that lose all the time. And then we have a roller coaster traders that win some, lose some, win some, lose some, and usually bow out because of the frustration. And the way that Mark Douglas ends this chapter is talking about the frustration of losing money. And that we've all been there. I know how it feels that when you're like, if you would have stayed in the trade, you would have lost more. You would have made more money, but you pulled the trigger. And I think the thing that's important to remember, and how I always catch myself when I feel that way, is that, but I have a system that saves me money. When if I would have done my emotional trading, I would have lost a lot more. So it's a give and take. Remember that your trading plan, the purpose of having a system and routines to trading is to cut your losses and let your winners run. So yeah, there's going to be times when you leave money on the table. And you can kick a little bit, but you need to move on. And that's the key to both leaving money on the table and cutting your losses, is that you got to be able to move on to the next opportunity. Remember, as we started this video off today, that the stock market doesn't care about you, doesn't care about history, doesn't care about anything. It is what it is. And it will present a new opportunity over and over again to those who see it. So, again, trade your system and let it be your guide to success. We're not responsible for the ticks up and down. You're not responsible for battling the market. What you're responsible for is to develop a system, to develop a routine to engage with the market in a successful manner, in a controlled manner, so that you can move on to the next trade regardless of the outcome. Remember what we've been saying for the past month. A good trade is one entered and exited based upon rules regardless of the outcome. So therefore, a good trade is a good trade, and they may work out, they may not. Cut your losers, let your winners go. Developing a winning attitude is the key to success. Taking responsibility is a cornerstone of a winning attitude. The problem is a lot of traders think that they have a winning attitude when they don't, or they try to let the market form their winning attitude by letting the market let them win on trades. That's not how you develop a winning attitude. So, to get the full version of today's podcast, there's our links, AccendoTrader.com, subscribe podcast HTML. Remember, that's our 30-minute version where we put all of our trades for the next day. Our YouTube folks miss out on that. To subscribe, if you're ready to get our daily videos and see how we adjust with the market and put out our trades. And remember, our trades are good for tomorrow, not things that we've been following. We try to give you safe, clear entries based on rules every day. And of course, there's our blog and our Accendo Traders 30-Day Challenge Forum. We had a great review session yesterday on candlestick patterns and how to add that into your trading system. Thanks, guys, and I will see you next time.